So this is the market summary for Monday, the 6th of February. So from our market, from our weekly summary, we mentioned that we'll be looking at somewhat implementing an auxiliary strategy just to see if that adds to our overall P&L, what points at the end of the week. So this is the first day using it. The first day we had one setup here. With the one setup, we took the short. We like the way this short set up. We test the 60-minute opening range low, pulled back, and it set up. So we had some platform issues early on. Actually worked in our favour. Ended up picking up 6.25 points on the shorter downside at 41.25, 41.21.25, all the way down towards that 41.15. Now, our actual main strategy set up on this very strong bearish candle here. Only a very strong bearish candle. We were looking to take the short, but we were worried about these. Let's just zoom out a bit here. We were worried about these orange crosses here, and that represents the 50% of last week's range. So the high, the low, the 50% of that range was denoted by these crosses here. Previously, as we've seen before the market opened during the European session, we've had prices come down towards that 50% midpoint from last week. We've had the bounce all the way up to the opening range, so we're coming down towards that level again. So I was a bit concerned about the level, so I didn't want to take the short here because I thought it would be a bounce. Instead, what I wanted to do was wait for a retracement and look to see if we would turn around and retest and possibly break that level to the downside. Now, this was an issue that I mentioned last week. I haven't included into this week's goals, but we did mention about in one of our videos from last week about respecting these levels, whether it's weekly highs, weekly midpoints, weekly lows, and so on. But I did take this trade. I did go short, held a position, and eventually I closed it as I saw volume come in on the 5-minute chart. So we had a short here in towards a key level. As we can see, the market turned around in the opposite direction. So we did lose 8.75 points off our main strategy there. With the short, we've had prices come to the high side, retested these red circles, which denote our previous day's lows, and that was from Friday, where we had NFP. Lows from there, noted by these red circles. We've had prices head towards those levels, and we posted a bearish selling candle. We traded through it, closed back through it, so I decided to go short. Even though I picked up 9.5 points, I did categorize this trade as being a bit of a FOMO, and the reason I did that was because that was not part of the trading plan coming into the day. So if it's not part of a strategy, it's not part of a trading plan, even though the logic behind the trade may be solid, I'm going to mark it down as FOMO because it wasn't planned for. So after suffering, and again, a pattern I'm noticing, when I do suffer a loss, it increases the likelihood of me taking a FOMO trade, even though it has worked out. It's not a very sustainable way to trade. So we went short, hit our profit target. Now, we had the actual setup for the short was on this candle of our main strategy, was off this bearish candle, this very large bearish candle here. And we were looking to go short. What I did, I sent in the beginning, what I was doing, I was waiting for a retracement up towards 25 to go short, so I would be able to take my profit before we head towards that 50% level again. What in fact happened was prices. I suppose I could. It's just 5 o'clock, so we'll have a look at it on the 1 minute chart. Prices kept on testing 24.25. Yeah, prices kept on testing 24.25 without breaking towards that 25 where I had a pending order sitting. Came close a couple of times, so as prices came back through towards the close on the 15, as prices came through the close on the 15, the time frame we are looking at, as prices came towards the close at 41.20.50, I decided to go short. I was filled at a fairly decent price at 41.20.75. Held a short and started to trail down, and eventually my trail stop was hit in and around at 41.21.25. I did have my stop a little bit lower, but I did get slipped on the stop order. It's nothing to be too concerned about. It's only a tick or so. So on the main strategy, we lost a half a point here on ES. So minus 9.25 points here on ES on the main strategy. The auxiliary strategy, it did work. Let's just have a look here. The main strategy did work. Sorry, the auxiliary strategy worked. Lost on the main strategy, and a bit of a FOMO, which I should not have taken, is in fact resulted in us having a positive day. So today should have been negative. It's only the FOMO trade actually kept us positive. So we'll have a look at the account. As we can see, we've had some growth in the account, so we'll go back to where we were on Friday, which was the 3rd here. So that's Friday's trade. So we came into today. As you can see, the very first trade, there we are, successful resolution. The second trade suffered a loss. Positive results on the FOMO trade, and the final trade here, we did suffer a small loss with our trail down. In hindsight, currently looking at the market, market is trading at 41.27. The trail was the correct decision, so it's good to see that our risk mitigation is working for us for the moment. We'll continue to do that. This week, what we're looking at is including, or if you haven't watched the previous week's summary video, this week we're looking at adding the auxiliary strategy, continuing to use our stop parameters, and I think those are the main things we're looking at here on week 6. Week 6, I suppose I should be looking at our FOMO. I think I'll include that. So I'll look at avoiding taking FOMO as well. Avoid taking FOMO trades, focusing on implementing auxiliary strategy. And with that said, thanks for watching.